Hello and welcome to IG's Trade of the Week for the week beginning Tuesday, the 9th of May, the shortened trading week in the UK. Each week we look at a potential market to trade for the week and the risk management around that trade. But first we'll look back at last week, in which IG's Axel Ridolf looked at going long Aussie dollar, New Zealand dollar off the catalyst of some central bank action in the activities last week. He looked at going long the pair at 108.05 with a stop loss down at 106.80. As you can see from the chart, we did have that spike higher on the day of the trade of the week recording, but then the price continued to fall back, and while it tried to recover into Friday's session, we did ultimately see the trade stopped out fairly rapidly actually on this occasion. Risk management and stop loss is doing exactly what they're meant to do, which is to get us out of the trade, because the expected continued move to the upside did not materialize. So we find the price essentially around that stop loss once again, with no real sign of any rebound still in place. In fact, we did briefly head back to the lowest level since April, so it still looks like the downward move is in progress there, particularly with, of course, a declining 200-day and indeed a declining 50-day moving average as well. But if we move into this week, looking at the trade for, as I said, the week beginning Tuesday, the 9th of May. In this case, we're looking at the Russell 2000, the US small cap index. Now, this has been a noted laggard, really, in performance terms this year, while the NASDAQ in particular has done okay in 2023, most of the gains coming through the beginning of the year and slowing since then. And the Russell, made up of the 2,000 smaller companies on the US stock market, not the smallest, but 2,000 of the smaller ones, has really been quite a disappointing performance, which many people have taken as an indication that really that the rally in stocks generally is a bit of a non-starter over the longer term, which is one potential view. Argument running that if you don't have small caps doing very well, it shows that risk appetite is fairly weak. At the moment, it has to be said, of course, the Russell has failed to even recover where it was in April, and a long way off its highs from the first 2 months of the year up at the 2000 level. We now find ourselves down at 1750. So the trade of the week for this week is to go short this index. We're currently trading at 1748. So we're looking to go short around these levels with an expected target of least down towards 1700, probably lower if we do get a sustained burst of risk off into the second half of May. So that's short the Russell 2000. And this for our stop, we're going to run this one relatively tight because you've got trendline resistance to give us a bit of a marker here. And also, if you look over the past week or so, gains have really faltered at 77.70 or so. So we're just going to run that slightly higher and put our stop at 77.75 on this, with an expectation that maybe that's about a 30-point stop with at least a 50 points of downside really is the target, perhaps with a expectation maybe we could carry on towards 1690 and the lows of March. So that's short the Russell 2000 for the week beginning Tuesday, the 9th of May.